Welcome Service Area Commissioners to a crucial aspect of your role, understanding service area budgets. In this educational video, we will delve into the intricacies of budgeting for service areas, equipping you with the knowledge and tools to make informed decisions that positively impact your community. From assessing financial needs to allocating resources effectively, this video will provide a comprehensive insight into the budgeting process, empowering you to prioritize and optimize services for the benefit of all residents. Join us on this insightful journey as we explore the foundations of service area budgets and their pivotal role in shaping the future of your community. During the course of this video, we will discuss two equally important parts of the budget. Part 1 focuses on budget management, the importance of budget planning, and knowing how to read and decipher financial documents that are crucial to successful budgeting. We'll uncover the Commission's pivotal role in preparing budgets, unravel the significance of planning, and navigate through various aspects of service area budgeting. Part 2 focuses on the annual budget process, from worksheets to tax caps, deciphering the budget worksheet, defining the terms contained on the form, and discussing the public meeting timeline and requirements for budget changes. We'll leave no stone unturned as we delve into these critical aspects of budgeting. Effective planning is essential for successful budgeting. By understanding your service area budget, you can engage in short-term planning for routine maintenance and immediate repairs, while also facilitating long-term planning for future projects and major repairs. This approach ensures prudent financial management and prepares you to address unforeseen circumstances effectively. Short-term planning, typically encompassing up to a maximum of 5 years, focuses on both routine maintenance and immediate repairs to ensure the ongoing functionality and safety of road infrastructure. Annual maintenance involves budgeting and scheduling regular activities such as pothole repairs, pavement markings, and seasonal services like snow plowing, sanding, and grading. These plans address immediate needs and contribute to the overall maintenance of the roads. In addition, short-term planning includes addressing unexpected issues that require immediate attention, such as repairing sinkholes, addressing road damage from severe weather, or fixing safety hazards. This comprehensive approach ensures prompt responses to urgent maintenance requirements, maintaining road usability and safety at all times. Long-term planning, encompassing anything more than 5 years in the future, involves identifying and preparing for future projects, such as road expansions, major resurfacing efforts, infrastructure upgrades, or even neglected maintenance services that can become costly. This planning includes conducting cost estimates and community impact assessments to ensure the effective utilization of limited taxpayer funds. Additionally, long-term planning accounts for major costly repairs such as large-scale pavement replacements or drainage system overhauls. It involves setting aside funds gradually to address expected large-scale maintenance needs without causing sudden financial strain on taxpayers. Furthermore, long-term planning encompasses capital projects that involve significant investments, such as constructing new roads, bridges, or implementing innovative traffic management systems. These plans require careful financial forecasting and consideration of long-term benefits to the community. When preparing for maintenance activities, referencing the Bid tab is a crucial step in the process. This tab contains the contracted prices between the service area and the maintenance contractor. It's important to note that these contracted prices increase by the current CPI with each renewal. When planning for activities at least a year in advance, these rates can serve as reference points rather than exact costs. When reviewing the Bid tab, you will find the following key information: the unique contract number, the official execution date of the contract, the date on which the bids were opened, the fiscal year in which the contract commenced, the last revised date of the unit prices. Below this information, 6 columns provide a detailed breakdown. Pay item number, associated with the service description in the next column, referencing services that the Commission may order. Service description. Details of services found by referencing the pay item number in the standard specification for local road maintenance handbook. Units indicates the measurement units for the service. Example, tons, miles, feet, hours. Estimated quantity. Anticipated amount the service area expects to order in one contract year. Used for bidding purposes. Unit price. The critical number for commissioners, as all requested items must be billed at this unit price according to the listed unit type on the bid tab. Total amount. The overall payment if the service area orders the estimated quantity. Used for bidding purposes. Bid total. Utilized for bid award purposes only, representing the amount the contractor could perform all estimated services in one contract year. The lowest qualifying bid is awarded the contract. The bottom of the sheet displays contracted unit prices for additional services not covered previously. If a commission requests a service like culvert replacement, the contractor provides an estimate based on the unit prices in this section. In cases where a unit price is not provided for a specific service or equipment, the contractor may use their standard rate or a rate agreed upon in writing between the contractor and commissioner. Every service area has its own soft ledger. This document maintains the current financial status of each service area. The soft ledger serves as a vital tool in budget management, providing insights into fund balances, encumbered amounts, and available resources. Knowing how to decipher the information contained within this sheet will empower you to make informed financial decisions and ensure transparency in budget management. On the soft ledger, you'll find the following key elements. Original budget represents the revenue received by the service area on July 1st, allocated for road maintenance purposes. Working budget comprises the original budget at the start of the fiscal year, inclusive of any incoming transfers from savings and any outgoing transfers. Available balance indicates the unencumbered portion of the budget, still available for expenditure. Spent amount reflects the total expenditure made from the purchase order to the present date. Encumbered but not spent represents the remaining amount available on the purchase order for future spending. Direct costs signifies the annual operating cost of rural services covered by your service area. Operating savings denotes funds carried over from previous years and available for expenditure. 20% reserve represents funds set aside for emergency events, to be utilized only after exhausting all other funds. This amounts to 20% of the working budget plus direct costs. These funds can only be spent with Assembly approval. Revenue sources delineate the proportion of revenue derived from taxes and interest earnings. Liquid assets quantify the amount available for expenditure within a service area, without tapping into the 20% reserve, which necessitates Assembly approval for spending. This comprises the available balance, the encumbered but not spent amount, and the funds available for expenditure in savings. Now that you understand the correlation between the bid tab, soft ledger, and budgeting, let's explore the expected level of maintenance required in your service area within a fiscal year. The recommended annual expense per mile for regular routine maintenance in a service area is $8,000. This covers the following items: 5 snow removals, 1 snow removal with more than 80 inches of accumulation, 1 hard pack removal, blading the roads twice. It also includes any sanding, brushing, or other 800 number pay items. It's important to note that the $8,000 per mile does not account for factors such as terrain, location, road surface type, or the current state of the service area roads. This figure is a fundamental calculation derived by dividing the cumulative expenditures of all service areas by the current number of road miles. As you gain more familiarity with managing the service area, you may discover that your area may require either less or more funding for maintenance. This serves as a foundational reference point for service areas to assess if they are adequately funded based on their specific needs. It's crucial to keep in mind that the $8,000 per mile recommendation is specifically for maintenance and does not encompass any allowances for improvements, major repairs, or significant projects. This figure is solely focused on covering routine maintenance expenses within the service area. While the work carried out within a service area is based on requests by the Commission, there are suggested services that are ideally performed at certain times of the year. This grid line offers Commissioners a comprehensive view of when to schedule specific services. It serves as a convenient visual aid for planning and budgeting particular services, providing a quick reference for the timing of essential maintenance activities. Mock budget scenarios are an invaluable tool for illustrating the prudent allocation of annual road maintenance funds, emphasizing the significance of responsible financial planning. This scenario provides a practical example of budgeting, equipping you with the skills to effectively address the evolving needs of your service area and prioritize the well-being of the community. The primary source of road maintenance funds is taxpayer contributions, underscoring the need for transparent and responsible allocation. Effective budgeting ensures that these funds are utilized efficiently to address maintenance needs and prioritize community safety and infrastructure. With no future grant prospects, the service area must internally fund all upcoming projects and maintenance activities. Prudent budgeting becomes crucial to strategically allocate available funds for immediate maintenance and future project requirements. Deferred road maintenance can lead to a rapid escalation in repair costs. Budgeting for maintenance allows the service area to promptly address issues, preventing small problems from developing into extensive and costly repairs, ultimately controlling overall expenses. Well-maintained roads directly contribute to the safety, accessibility, and overall quality of the community's infrastructure. Enhanced connectivity and safety benefits residents, businesses, and visitors alike. Effective budgeting facilitates long-term financial planning, including setting aside funds for future major projects. This demonstrates fiscal responsibility and forward thinking, ensuring the service area is prepared for upcoming infrastructure needs without facing financial strain or unexpected shortfalls. This example budget offers an overview of a service area with a yearly revenue of $60,000. It outlines the allocation of funds for routine items, reserves a contingency for unforeseen expenses, and earmarks a portion for future projects. This demonstrates that budgeting does not need to be overly complex or time-consuming. Even a basic outline of fund utilization can significantly impact the success of the service area, contributing to effective financial management and planning for future needs. When planning for large-scale capital improvement projects, it's important to consider various factors that can influence the project's planning and success. Large-scale projects do not rely on prices included in the bid tab of your current annual maintenance contract. They require specialized cost estimation methods to accurately forecast the financial requirements of the project. Many elements can contribute to variances in large projects, such as environmental conditions, material costs, and unexpected site issues. Understanding and accounting for these factors is crucial for effective project budgeting. All capital improvement projects are overseen by the Division of Design and Construction. Specialized project management plays a critical role in ensuring the success of large-scale endeavors. The included cost estimation table offers a rough estimate of the expenses associated with specific large-scale projects. However, for some projects, additional information may be necessary before an accurate estimate can be provided. When determining the scale of your project and the appropriate implementation method, the Rural Services Engineer serves as the primary point of contact. Their expertise can help guide you through the initial stages of project planning. By taking into consideration these factors and leveraging the expertise of professionals, you can better navigate the intricacies of large-scale capital improvement projects and lay a solid foundation for their successful execution. Next, we'll delve into the Commission's influential role in adjusting the revenue received by the service area and allocating it for specific activities. The process commences in January and wraps up on July 1st, signifying the start of the new fiscal year. Throughout this time frame, the Commission plays a key role in making strategic decisions to shape the budget for the upcoming fiscal year. It's important to note that any changes or adjustments to the budget necessitates a public meeting. This ensures transparency and public engagement in the decision-making process, allowing residents to provide valuable input and feedback, and commissioners to officially vote on the changes. In this segment, we will thoroughly examine the budget worksheet, a crucial tool for adjusting the budget. Participants will learn how to define terms and specific fields in the worksheet, grasp their importance, and understand the implications of the data entered. Moreover, it is essential to recognize that modifying the budget is closely linked to the planning and budgeting processes of the service area. This connection underscores how budget changes are intertwined with the overall planning strategies, guaranteeing that financial choices are in line with the service area's long-term objectives and operational requirements. Through this section, commissioners will gain proficiency in navigating the budget worksheet, interpreting its various components, and effectively communicating the implications of proposed changes in the budget allocation process while maintaining alignment with the service area's planning and budgeting efforts. Commissioners play a crucial role in shaping service area budgets. While commonly referred to as budget season, there are certain constraints on altering a service area's budget during this period. Throughout this phase, commissioners can influence the allocation of forthcoming revenue by transferring funds from the fund balance to the operational budget, allocating funds to a capital improvement project from the fund balance, shifting funds from the upcoming fiscal year revenue to the fund balance, potentially reducing tax revenue. This process typically commences in February each year. Despite having the ability to plan the service area's budget, commissioners are unable to raise tax revenue during this period. The process for increasing tax revenue begins in October and necessitates a vote by the service area residents. While we begin preparing for budget season in January, Commission chairs typically receive the budget worksheet around the first week of February. This worksheet contains crucial information that may appear complex at first glance. Let's break down and define the key components of the worksheet. Taxable assessed value. This figure represents the current taxable value of all parcels within the service area boundary, inclusive of any relevant exemptions. Fund balance. The fund balance reflects the amount present in savings as of December 31st of the preceding calendar year, does not account for the 20% reserve. Mill rate. The mill rate in the service area is the rate used to determine the funds generated by property taxes. 1 mill equals $100 per $100,000 of taxable assessed value. Mill rates may slightly vary from year to year due to fluctuations in taxable assessed values. Road miles. This section indicates the total number of miles within the service area that are eligible for maintenance. As we move to the revenue section, you'll notice two key figures: the revenue from the current year and the recommended revenue for the upcoming fiscal year. There is also a column where the Service Area Commission can suggest changes. These columns extend through both the revenue and expenditures section. First is a breakdown of the revenue the service area is expected to receive. Property taxes. This is the revenue from taxes, which has been determined by a previous vote. The tax cap is adjusted annually for CPI. Commissions cannot increase this number during this process. Interest earnings indicates the estimated revenue earned from interest. The total amount is the total that will be received from revenue sources. In the bold boxes, you will find the following. Contribution from fund balance. This field indicates the amount the Commission wishes to move from the fund balance to the operating budget for the upcoming fiscal year. The total revenue is the sum of all these revenue sources. Now focusing on the expenditures section. If the service area has a loan payment due, it will be indicated in this row. An estimate of operating expenditures related to road maintenance is indicated here. This number is calculated by taking the total revenue from the row above and subtracting the borough direct cost. Direct costs is the annual cost of operating the Rural Services Division that will be paid by the service area. The total section indicates the total amount of estimated expenditures for the service area. This number is the total loan payment, operating expenditures, and direct costs. In the bold boxes, you will find the following: contribution to fund balance. This field indicates the Commission's desire to move funds from the upcoming revenue to the fund balance. Contribution to capital project. This field indicates whether the service area is moving funds into a capital project account. If the service area will be using the field, it is important to fill out the field below with a project description. These two fields will only be used if you are currently working with an engineer or staff member to manage a large project. New total indicates the new expenditures, inclusive of any transfers to a project or the fund balance. Remember, it's crucial to maintain a balance between revenue and expenses. Changes in revenue should be in harmony with adjustments in expenses. The backside of the form also provides key information about the service area's past expenses and provides an estimate of the required 20% reserve for the next fiscal year. For commissions looking to make changes, it's crucial to understand the tight timeline between information availability and the worksheet deadline. It is important to understand that a public meeting is necessary to propose changes. Rural Services suggests scheduling your meeting for February in January to allow time for necessary preparations. It is required to provide a 2-week notice for meeting requests to ensure ample time for advertising and to meet code requirements. Scheduling meetings in advance helps prevent time constraints after receiving the budget worksheet in early February. When requesting a meeting, include budget discussion or a similar agenda item to focus discussions and ensure that the meeting qualifies for budget adjustments. Ensure that before your meeting, the Commission verifies the presence of a quorum for voting purposes. While conducting the meeting, ensure all agenda items are addressed, focusing on presenting recommended changes. Take detailed minutes, clearly indicating each commissioner's vote. Once the meeting has taken place, be sure to provide the meeting minutes and the budget worksheet to Rural Services by the specified deadline to meet submission requirements. By following these guidelines and planning ahead, commissions can effectively navigate the budget change process within the given time frame. If the Commission fails to submit a completed budget worksheet to Rural Services by the deadline, the service area budget will default to the recommended budget. Commissions may choose to hold a meeting after the deadline if they do not plan on making any alterations to the budget. It is important to keep in mind that after March 1st, the service area budget will automatically revert to the recommended budget. Although commissions can hold meetings after the deadline for budget discussions or transparency reasons, no modifications will be accepted after the deadline. It's essential to understand that even if a budget worksheet is not submitted on time, tasks such as upcoming projects or fund transfers can still be addressed throughout the year with a signed form. The only task restricted to this process is lowering the tax cap. The primary aim of the budget worksheet is to offer constituents transparency regarding the utilization of taxpayer funds. The submitted budget worksheet is what gets published in the Fairbanks North Star Borough's officially approved budget. It serves as evidence that the Commission is demonstrating fiscal responsibility by effectively planning and utilizing taxpayer funds. When examining the service area budget, commissioners may find it necessary to raise the tax cap to ensure adequate services can be maintained. The process of increasing the tax cap typically begins in August, when Rural Services notifies commission chairs. Those who wish to explore increasing tax revenue will then hold a public meeting to vote on a new tax cap dollar amount. Service areas operate under a tax cap system, which restricts the amount of taxes that can be collected to a specific dollar figure, set by the Commission based on service area needs and subsequently approved by the residents of the service area. If the vote by the Commission to increase the tax cap is successful, the Commission will submit a tax cap election request to Rural Services by October. Following this submission, an official election is scheduled for March of the following year, where residents must vote to approve the increase in tax revenue. If the residents approve the measure, the service area will start receiving the additional funds on July 1st of the same year. Conversely, lowering the tax cap is a relatively simpler process, but it can have significant consequences if not carefully planned for the service area's future. Unlike increasing the tax cap, reducing it does not require a resident vote. The reduction is only addressed during the annual budget process. Commissioners convene a public meeting where they add tax cap reduction as an agenda item. Similar to raising the tax cap, the Commission members vote on setting a new, lower tax revenue cap. If the vote is successful, the Commission submits the budget worksheet reflecting the reduced tax revenue request. This request then goes to the mayor, who, in consultation with Rural Services, decides whether to send the proposal to the Assembly for approval. If the reduction is approved, the service area will experience the decrease in revenue starting on July 1st of the same year. It's crucial to note that should the need for additional tax revenue arise in the future, the tax cap cannot be increased without an official election and resident approval, even if it is to return to the previous amount. Having a well-thought-out plan in place for the service area's maintenance and repairs is essential for a successful tax cap reduction. Service areas must pay for the cost of a tax cap election regardless of the outcome. The current estimated cost for a tax cap election ranges from $2,000 to $5,000. This financial consideration underscores the importance of prudent decision-making and strategic planning when considering adjustments to the tax cap. Now that you have delved into the intricacies of service area budgeting, you are equipped with the fundamental knowledge needed to navigate the processes of adjusting tax caps, remembering the importance of careful planning, transparent decision-making, and community involvement in ensuring the financial stability and effective service distribution within your service area. By following the outlined procedures and maintaining a forward-thinking approach to future maintenance and repairs, you can contribute to the sustainable development and well-being of your community. Stay informed, stay engaged, and continue to apply these principles to promote financial responsibility and service excellence within your service area. Thank you for joining us in this informative video. As you navigate your role as a Service Area Commissioner, remember that your contributions are crucial to the well-being of our community. Should you have any questions or need further guidance, feel free to reach out. Together, we're building a better and well-maintained community. Welcome aboard, and let's make a positive impact together.